Just if we had to take cognizance of all that happened last week, it was a terrific bull run that the markets witnessed. In fact, you had the print of 23K as well that we touched for the first time ever. You had the Nifty Bank as well, which was fairly supportive, and the fact that it was around the 50K mark for the Nifty Bank index. So all round, there was pretty much strong cheer. Maybe the broader markets didn't quite play catch up. But the fact that the volatility index is at those levels of 21.7 and the fact that we've got a healthy handover, Nikunj, to say the least, coming in from across the globe, what's in store for us this week after 23K last?
More than anything else, I think what we must realize and recognize is that we are now less than 10 days away from the actual verdict. And ahead of that, which is ahead of the election verdict, the market positioning clearly seems to be very simple, which is that there is no worry in the market. The short sellers are running for cover. The net bias of the local crowd, which is the DII and retail, is quite favorable. And if one really looks at the broader tone and the tonality, the broader tone and the tonality clearly seems to be indicating that the bullishness is intact and the bearishness now seems to be fading away. For me, the most important data, and which in a sense has been the concern area for the market, is that what have foreign institutional investors done? We saw that big Thursday. It was not followed up with a big Friday. So the cash market buying cannot be called as very, very encouraging. Sum total, it is neutral, which is not negative, good. But the total short positions, markets in the FI or FIs were like on really everybody was on the same side of the boat, so to speak. The net short was 72%, which has now become 51%, which means that there seems to be a scramble, there seems to be a change, and there seems to be a bout of short covering, which clearly is evident at least by the FI fraternity. So the bottom line here is that new highs are intact, global cues are strong, crude is in the right direction, FI are covering for positions, and are we in for this extension of this trend in the run-up to the election? And looking at the price action, it appears that bulls really have an edge.
Yeah, extension of the trend. And even, if we map out the way we've performed in the week gone by, that has been fairly encouraging, at least compared to the kind of outperformance we've witnessed vis-a-vis the rest of the world. While the Dow Jones has declined about 2.3%, our own markets have gained about 1% or so, and the Nasdaq has managed to almost play catch up there. But yes, as you were mentioning, Nikunj, with respect to the FIIs, even in index futures, what the current position is quite telling. In fact, in terms of the overall FII selling, the cumulative outflows has been nearly $6 billion since the month of April, and the largest outflows, Nikunj, have been within the financial sector, with on a year-to-date basis outflows of close to $7 billion.
So Avan, if you frankly ask me that which is one sector where there could be a tactical trade and there could be a cyclical uptick, I think it is financials. See the Bank Nifty last week, and let's look at that. The small cap index, the mid cap index, the Bank Nifty and the Nifty. We look at all the assortment here. It was large cap. It was not small cap. Within large cap, it was financials. So if FIs are coming back, that means large cap financials obviously will do well. And if one is looking at this entire combination of short covering and fresh buying and underperformance and ownership, then you would imagine that banks do have a case to start outperforming. See, banks have been the biggest drag, so to speak, on the market. They've not participated. IT for right reasons, banks for technical reasons. If those technical reasons and banks are sorted out, then we could be in for a sharpish move in large cap stocks and especially private financials. So one extends the FI data, the mood on the street, the global cues and under ownership and also technical factors, then I would imagine that FI are coming back and financials should catch up. I will not be surprised if that trade really extends itself for next couple of days.
Okay, that's the view coming in on the overall financial sector. And by the way, as we highlighted as well, the fact that the kind of handover that we've witnessed from Wall Street overnight seems to be fairly positive. Nasdaq has actually closed at a record high. A lot of the AI trades are holding out, like Nvidia, and the Asian markets too, for the most part, barring the Hong Kong markets, are holding out in the green. That's the Nifty implied open at 23,038. But of course, the other big talking point is what's happening with the general elections. The phase 6 voting highlights 61.2%, I think, thereabouts, 63.4% rather, in terms of the voter turnout that has been recorded. And Nikunj, how would we look at this as an event in light of the kind of voter turnout that we've seen across the phases, including phase 6?
See, voter turnout is no longer a moving part now. Voter turnout and the importance of voter turnout, I think, was evident in the phase 1 and phase 2 when the numbers were low and markets, in a sense, panicked. I guess the number is not that bad. B, you got to just put things into context here, that places like Delhi and places of North India where the voting is happening right now, the intensity of heat wave, I think, is extremely strong. So low turnout also could be a function for that. So I don't think this is any longer a market moving number. This was, let's say, a market moving number after phase 2, after phase 3, which got market worried. But frankly, now the general mood and the street, and at least on the market, by market participants, is that there is going to be continuity. This is something that markets are telling you. This is something what markets are pricing in, and this is something is evident in the way how the price action both in the cash market and in the F&O market has moved. So the voter turnout number is not a moving number. It was a moving number a couple of weeks ago, but I think now it's pretty much neutral.
Okay, fair enough. Not really market moving in terms of the Lok Sabha election voter turnout. But speaking of this week as well, and it's going to be pretty important to track all of the events that we'll be looking at, apart from the fact that, of course, it's the Nifty expiry. We're in the last week of May. You've got the last phase of the elections, as we highlighted. The GDP print will be coming out. There's going to be quite a bit of IPO action, as well as the fact that the Fed beige book is going to come out. So, Nikunj, lots to keep us on our toes this week.
See, the interesting bit is that the election verdict may be there on 4th, but markets will react to the opinion polls or exit polls, I think, on Monday, which means that large part of the election positioning, which is election trade and the swing which everybody is anticipating and expecting and is really playing for, I think would be on play on Monday. So I see adjustments happening on both the sides of the trade. The long guys would like to hedge, the short guys would like to cover. Whatever insurance and protection has to be bought, a lot of changes actually will happen. So this Thursday and Friday, I think you will actually see a lot of action in the options market. You will see a move in the VIX. And given that the market will be reacting to the exit poll outcome, which will come over the weekend on Monday itself, and that's how markets have done, they tend to react. They tend to react sharply on exit polls. At least that's what the last two experiences have been. I guess we could be in for a interesting Thursday and a choppy week, so to speak, because the market positioning by traders and by HNI investors, I think, will start moving between Thursday and Friday.
If you like this video, then like, share and subscribe to ET Now.